What are the main characteristics of transitions this year? And what does this tell you about the changing asset allocation strategies or investment preferences of your clients? And what opportunities do these trends present to you as a transition manager?
Well, in our experience, 2012 has been quite different from preceding years. This year we've seen a high number of equity changes where pension funds, asset owners are suffering bad performance from active equity managers, and they're terminating them and either placing their money in a passive equity fund or another active equity fund. It seems to us that asset owners are becoming less tolerant of bad performance, so these changes are happening all the time. Now, what we have seen is an increase in fixed income activity. We've seen investors pull away from the Eurozone, or we have seen customers move out of low-yielding government debt into emerging market debt or credit markets to get a pick-up on the yield. What we haven't seen, funnily enough, is a high level of asset allocation changes. And we believe that is probably a sign of the uncertainty in Europe at the moment. What opportunities does this bring for us? Well, a lot of it is business as usual for us, but the fixed income does work particularly well, particularly in credit markets, which can be expensive to execute. We operate a panel of over 60 brokers, and that means that we can source liquidity from a very wide pool and do so intelligently, directly adding value for our customers.
What do you think are your strengths as a transition manager?
Well, this is the best question you can give to a transition manager, really, isn't it? But in all seriousness, I think it's best summarised by our ownership of our operations, technology and execution infrastructure and the benefits that that brings. So what I'm talking about here is we own our execution infrastructure, which gives us optimal control over the trading strategy, monitoring it, changing it, adapting it. We're not reliant upon a third party for the execution, performance and control. We talk about technology. We have one system, and we operate one system, one set of practices across our global team with centres in New York, London and Sydney. And that means that if we're managing a global transition outside Europe working hours, we can have that transition managed and monitored 24 hours a day. Transparency, this is something that is at the top of the agenda for customers of transition managers. Owning our own infrastructure enables us to provide ultimate transparency of the path of an execution all the way to the client's account. So an example there, we have some customers who want to do spot checks on equity executions and say, give us the child orders that made up this fill onto my account. We can do that because we own the data.
Where do you see new business opportunities in Europe?
Well, I think it's fair to say that the UK and the Dutch pension market will continue to be the two biggest savings markets for us in Europe, for which we sell transition services. But we're seeing increasing demand for transition services and cost awareness from the Scandinavian region, from a whole variety of different types of investors. And we mustn't forget the Middle East, not in Europe, but there are new pools of assets being created and funded all the time. And those institutions will become integral to transition managers because of their ongoing long-term funding and growth of asset pools. Another area we're branching into is the DC pension space. DC pools are becoming bigger and bigger, and they now have the scale and size to warrant using a transition manager. And that requires a slightly different skill set from the traditional DB pool, with more administration and associated processes. We're also seeing interest from clients in terms of asset allocation overlays, where they want us to maintain their strategic asset allocation on an ongoing basis. And that changes the relationship that the transition manager has with the client, because it's no longer transactional, it's closer to their investment strategy and allows them to have an ongoing relationship.